Awesome. Cool. So kicking off with the introduction, welcome everybody. This is Buildsphere number 8. Today we are going to be hosting Accumulator. We are joined by Rob and Dracula. And to talk a little bit about what Buildsphere is about, this format is aimed at giving the community access to the projects that are populating IOTA. Everybody will have a chance to ask questions at the end. I'm your host, Jonathan, and with that, let's start with some introductions. So yeah, please introduce yourself and the role that you play at Accumulator. Let's pass it to you first, Rob.
Yeah, sure. Perhaps I'll start by saying that Accumulator is a partnership between Nakama, which I head up, and FDAO, which Dracula heads up. So I guess I'll start by introducing myself. So I'm Rob Dakin. I worked in traditional finance for over 15 years. Always been really interested in fintech and technical solutions around finance. And in 2015, I kind of fell down the rabbit hole of crypto. Prior to 2015, I'd read a lot about Bitcoin and crypto, and I kind of brushed it under the carpet thinking, regulators are going to, stamp out on peer-to-peer transfers because coming from a traditional finance market and having to work through all of the red tape and compliance issues, I never thought it would get off the ground. Clearly it did. And in 2015, I fell down the rabbit hole, got very interested in Ethereum and smart contracts, made my first investment in IOTA in 2017 when it first listed on Bitfinex. I'd learnt about IOTA prior to that, but that was my first opportunity to buy it. And off the back of that, I got really interested in DeFi. I was an early investor in Etherland, which turned into Aave. Got involved in DeFi Summer with Compound and all of the food tokens and yield farming. And then I got really interested in other chains and networks as Ethereum got far too expensive for the the retail investor to dabble into. So I got involved in the likes of Binance Smart Chain, AVAX, Phantom. That's where I met up with Dracula actually on Binance Smart Chain and Phantom and formed a really good relationship. And then I had the opportunity of launching Nakama, and Nakama is a Web3 builder and also a Web3 VC. We got a strong focus in IOTA since I've been an early investor in IOTA, and I know a lot of the team and formed some really strong partnerships with the foundation and other builders in the space. And working together with Dracula, he's a long-term friend of mine now. We formed a partnership to develop a number of different applications, one of which is Accumulator, that we're going to talk about today. So I guess that's a brief introduction on myself.
Awesome. Yeah, Drew OG, so I can see, fellow food farmers from the golden days of DeFi on Ethereum. Yeah, awesome. I can relate to that a lot. So very excited to be learning about your takes here on Accumulator. Yeah, Dracula. Yeah, please.
I still remember farming YAM tokens and getting rugs 2 or 3 times. And it's funny, when it comes to DeFi, the best way to learn is by paying for your education. And I certainly paid for my education in those sort of early DeFi days of being a bit 2D gen, shall I say, and farming some of these food tokens. But it's a lesson learned, and like I said, the best way to learn is paying for your education and having a bit of skin in the game.
Very fair point. Yeah, I paid a bunch of tuition money. Sometimes I'm asking myself whether the learnings are really going to stick, though. Awesome. Dracula, yeah, let's please hear an introduction of you and what your relation is to Accumulator.
Yeah, sure. Once again, good morning now that we're back. Yeah, CT handle, Dracula Presley. I've just been building here. I think I started my first project around 2020. I don't have a finance background like Rob, mostly just a guy that was really interested in crypto. I had no kind of trading background or finance background or anything. I was just really interested in it. Started buying crypto as DeFi Summer and, ERC20s became prevalent. I got more and more into trading. To the point where, I was just obsessed with it. And, I just got heavily into trading, and I got to the point where about 2020, I said, hey, it's time to learn how to start building things. I want to be more involved. And started on BSC. That's where I met Rob from the Comma, and have just built at this point, whether it's DeFi applications, NFTs, whatever. I've been around for years. So yeah, I've had projects on BSC, Phantom, Avalanche, Hedera, Shimmer with Accumulator. And yeah, as Rob mentioned, we decided pretty early on that, it would be good to team up, develop some applications together. So it's been great working with Nakama. They obviously just have so much insight and knowledge, especially when you put the whole team combined. So yeah, that was kind of my journey here, long story short. And yeah, now we're moving on to IOTA EVM. Accumulator started on Shimmer, but we are getting geared up here to be open up on IOTA EVM as well. So really excited about that.
Awesome. Yeah. So I think it's a good point here to start with. What is Accumulator and what was the idea behind launching it? I think those two questions usually go well together. So, passing it on to you. Please give us the idea. What is the idea behind Accumulator and what is Accumulator doing?
Yeah. So I had experience, and this is part of why we had decided to work on Accumulator together. I had experience in the past working on other yield optimizers or yield compounders, however you refer to them. Essentially, if you're familiar with, like, probably the biggest name out there most people are familiar with is Beefy. Our vaults are a clean fork of Beefy, where, when you have new chains, you have these like paradigms that need to be available, right? So you need DEXs, you need lending protocols, you need NFT markets, you need, just all those things you think of that if you go to any chain they have. So yield optimizers fall into that category. So that was kind of what we decided early on was, hey, this would be a good project for us to work together on since I have experience in it. And, Shimmer and IOTA EVM, we're going to need, a version of this paradigm. So to put it shortly, a yield optimizer basically is like, let's say you have Magic C and they have a farm where you can put your liquidity tokens into to earn Loom. What the yield optimizer does is you would take those liquidity tokens and deposit it into our vault, which then we can automate compounding your earnings. So every, 2 hours, 4 hours, however it's worked out, the vault takes your rewards, it sells them to create more liquidity tokens, and then restakes those tokens into the farm. So it's a nice way to, I tell people often it's more of a long-term strategy if there's something you're bullish on. This is not like a quick in and out, because the reason the like APYs are usually so much higher than a farm's APR is because it's counting how long it would take to reach that, like for compounding, usually like over a year, since APY is more of like a level you can reach from compounding consistently. So, and some people prefer to do their own compounding, and that's totally fine. I totally understand. But if you're someone like me that probably at any time has 10, 20, 30 positions open at a time, that's really nice to just kind of like set it and forget it, so to say, where it's doing the compounding for you. It's restaking in the vault for you. You're not having to, check it several times a day and do it manually. So essentially, in a nutshell, that is the main service that Accumulator offers right now. But with IOTA EVM coming, we're hoping to expand into some other strategies and some other things as well.
Yeah, awesome. Thank you so much for that introduction. I've been having a sneak peek on the Accumulator website, of course, and I have spotted the IOTA logo already looming in the dApp. Can you tell us a little bit about your concrete plans for launching on IOTA? Are you looking to integrate any existing DEXs? What is the process here?
Yeah. So, you've probably noticed that that's just been in the last couple days that we are, getting the site ready to be able to, have Shimmer vaults and IOTA EVM vaults. So right now, the plan will be our main partner is Magic Sea. And when they start having farms with emissions, we'll be able to start opening up some of our vaults for certain pairs. So the plan is to do that as soon as possible. I think we're pretty close to that happening. We should be, up and running. Once those are running, we'll be up and running within days. So that's what we're looking at right now in terms of the vaults. With IOTA EVM, we will be launching a token, ACCU. And what ACCU will do is allow single staking to basically earn a portion of our fees. So just by single staking ACCU, you will be able to earn actual, SMR in IOTA, which is a nice perk for sure to, it's not, you're earning the actual, native gas token. So it's real yield.
Yeah, in which case it'll be IOTA that they earn. But yeah, we're super excited at the prospect of launching ACCU, which will be the utility token for Accumulator, and will also be rewarding the current users of the platform, both on Shimmer as well as once IOTA is opened up. So there will be a healthy allocation of an airdrop of that token to existing users.
Yeah, no, definitely wanted to touch on that we're sort of in a unique situation. We started on Shimmer, and a lot of the other protocols that were on Shimmer had already released their token. We knew from the start we were going to wait a little while for the token. We just wanted people to be comfortable with the vaults, and we wanted to make sure that, fees generated would make sense. So once we knew IOTA EVM was coming sooner than later, we decided we would wait to launch, basically, just because that way we're not having to, there's just a lot more things to figure out when your token already exists, and then you're having to move to a different chain, and you have existing tokenomics and all that sort of stuff.
100%.
Yeah, so we're pretty excited to finally get this worked out. But yeah, what I was going to say was, because we were in that situation where the protocol launched, but we did not have a token, we are definitely going to be putting a large effort into rewarding our early users. Because without them, obviously we would not have a protocol, we would not have a project. So we really appreciate our early users. And yeah, there's going to be a substantial airdrop for people that have staked in our vaults.
Yeah. One of the advantages that we'll have in launching Accumulator on top of IOTA is, as Drac alluded to earlier, is that we've already tested out this protocol on top of Shimmer. We've got a clean audit. Code is clean forked from Beefy, which is battle tested. We've also tested this on Shimmer EVM, which is the staging network for IOTA. So really all we're waiting for right now is for, some large DEX activity. We anticipate that to come from our number one partner in Magic Sea to open up the liquidity pool farms. And what a liquidity pool farm is, you can currently provide liquidity onto Magic Sea on IOTA EVM, but what they haven't done yet is they haven't turned on the tap for incentives. So once they turn on the tap for incentives, basically they're the farms that people can place those LP tokens into to earn an additional reward in Loom tokens. When they activate that, which we anticipate to be soon, we should be relatively quick to actually activate support for IOTA EVM and Accumulator, and the allocation of the airdrop will likely continue on IOTA EVM. So be sure to get involved in providing liquidity through our compounding votes, because you can still receive an airdrop allocation. We'll need to sit down and discuss the terms, but we'll share them with the community shortly.
Awesome. Yeah, especially with Magic Sea already under the belt, I'm wondering, is there a process or some criteria that you impose on any other upcoming AMM that wants to have, their yield compounded through Accumulator?
Yeah, I mean,
Yeah.
Oh, sorry, go ahead, Drac.
Oh no, I was just going to say that's a really good question. And we got asked that several times on Shimmer. And yeah, I mean, Magic C is our main partner, but of course, we'll be open to working with any other AMMs that, have volume and, want to have some vaults. For sure, it's here for the community, and it can provide a lot of benefits for new up and coming dexes as well. So yeah, we will definitely, there's no set criteria at the moment. We'll probably have to develop some, just for it to make sense for us to, take the time to work on new vaults and all that. But yeah, we will definitely be open to chatting with anybody that's got a project coming up on IOTA EVM.
Yeah, 100%. Just to add to that as well, one thing we'll also want to do is to make sure that the teams and dexes that we work with are great. We've got a really good relationship with the Magic C guys. Like, I've met them in person, I trust them. And so we want to have that same kind of trust and partnership with other dexes as well, because ultimately, if we're opening up like LP votes and compounding liquidity pool, we don't want to give exposure to our users and customers of a DEX that potentially might have some security flaws or potentially act fraudulently. So we will keep that in mind. Although ultimately we do ask that, our users, take responsibility for providing liquidity on the DEXs. We will ourselves also look to do some due diligence ourselves, although ultimately the users need to monitor that position.
Yeah, I think that makes a lot of sense, actually. I think users usually appreciate if there is some kind of diligence done and they know they can, at least trust that there has been some effort going into figuring out whether this is actually something that you want to offer on Accumulator. Yeah.
Yeah, 100%. And just to add quickly, it's been really exciting for me actually looking at the ecosystem over the last few weeks. Like, Harry has introduced me to so many new teams actually building in this space. Like, there's new dexes and new tools and protocols coming into IOTA EVM. And so there's, it's a really exciting opportunity for us to like build on our network, build on our ecosystem. And we haven't seen a lot of these applications launch just yet, because essentially we need like that, we need the dexes to launch. We need them to turn on that tap of liquidity incentives, and then the other dApps can start to deploy, and then the ecosystem will start churning and get rolling. But it's a really interesting time that I can see, in that we can see a huge number of new developers coming into this space, and it's exciting to see. And with the economic, power behind IOTA and Ecosystem Fund, I'm confident that we will get that traction needed in the ecosystem space. Sorry, Drac, I cut you up there.
Oh, no problem. I was just going to also touch on that point you made, that, we do realize that a lot of people from the IOTA eco there's people that are newer to DeFi. And so, yeah, security is very important for us. That's part of why when we developed this, we thought that, hey, we could make things more complex, but coming out the gate, let's do more of like a fork of Beefy, because their contracts are battle tested, never had a hack, tons of audits. Even on top of that, we still performed a third-party audit of our own, just for extra peace of mind. Just wanted to make sure that there was no flaws. So yeah, when we're dealing with new partners and dexes, I'm also comfortable to say that we will also be doing due diligence to make sure that, we feel satisfied with the security of the project, because, we're aware that having more contracts, having a protocol that, is working on top of another protocol, that does introduce, an element of extra risk. So we're definitely going to take every step possible to, make sure that everything is as safe as possible for our users.
Yeah, awesome. Let's talk a little bit about the strategy side of things. I think it makes sense, before kicking that off, that we get a short introduction about the difference between APR and API. I think that is going to help our understanding here. Rob, Dracula, either one of you, please give us a short explanation of what the difference is here.
Yeah, so essentially APR is the interest rate you're earning. If you're just looking at, like, let's say, hey, I'm going over to Magic C and they have 80% APR on this farm, then that would be purely the interest rate you're earning, compared to APY, which is giving you a rate based on compounding your earnings. So that is why, like, if you go to Accumulator, all of our rates are given in APY, because it's telling you, we're compounding your earnings. So this is the rate you would be able to earn through compounding.
Sorry, I was muted then. The other thing to bear in mind as well is these rates are variable, and particularly when like farms kick off on a DEX during the early days, they're extremely variable, because the amount of people that are deploying liquidity into that farm is perhaps low to begin with, and it will gradually, fill up as the opportunity is available to becomes, more people become aware of the opportunity, as well as the value of the incentive, which is Loom, fluctuates in value as well. It can go up in value as well as down in value. So the interest rate that you see at sort of an APY rate, it's calculated over a yearly position, and at times it's maybe better to actually take that and try to calculate the APY based on maybe a monthly position or weekly position, particularly if it's a new token. So what I'm trying to say there is, like, I'm trying to manage people's expectations. So if they see that, like, even APR on, say, Magic C is, say, 70%, that's not a guaranteed 70% in a year. It's variable. It depends on a number of different things, such as like the amount of people providing liquidity, the value of the incentives, and so on and so forth. And that the APR that's shown on Magic C is not compounding. So if you just place your liquidity into Magic C for a year, and the prices don't fluctuate and the amount of liquidity doesn't fluctuate, and the APR is, say, 70%, and you'll get a 70% return at the end of the year. Highly unlikely, because it's variable based on a number of different factors. What we're offering is a compounding strategy whereby we take the incentives on a, like, let's just say daily or hourly position, and then we reinvest them back into LP tokens into the vault, and it compounds the interest. So if, say, you saw like a APR at 70% on Magic C, if you compound it through Accumulator, the compounding rate is somewhere close to 100%. So it's quite significantly high, because it's compounding all of that interest back into the principal, which can earn more interest over time, and it has this snowballing effect. Particularly with like higher interest rates, it's a lot more significant. So if you're looking for like a strategy which is like providing liquidity over a longer period of time, you're happy with that position, it's a good vote to be in. But I also want to be very transparent as well, in that I just want to flag an additional risk involved here. So if you use our contract, it's a different contract to the liquidity pool farm on top of Magic C, and some people would argue that there's an increased risk in smart contract manipulation or action there. We look to mitigate as much risk as possible, but I do want to be very transparent about all kind of risks that investors face. One of them is smart contract risk. So if the smart contract that we've inherited from Beefy is manipulated, it's likely not just to be our protocol, it's likely to be, Beefy, and all of the Beefy forks will also be compromised. I can't personally see that happening, considering that the code has been battle tested for so many years now, and it's been audited across lots of different audit firms, not just Beefy audit firms, but we've had our code audited, and lots of other forks have had their code audited. But I just want to be transparent about additional risk factors that investors have to take on board. But ultimately, they're accepting a slightly bit increased risk position for less manual work and a higher return, because we're also compounding constantly.
Yeah, I appreciate that answer a lot. Of course, there's always risks involved, but of course, mitigating those lies as much in the hands of the protocol as of the end user in doing their own diligence. So yeah, makes absolute sense. And I think that is a very recommendable thing to bring up here. Let's talk about some numbers. Of course, it's always a little bit hard to imagine compounding interest, how that will actually work out. So wondering if you can share some figures with us. How much does auto compounding have an effect on the APR? Can you put that into perspective? Maybe if there is an APR of 100%, what would that look like depending on the compounding strategy? Just to give us a rough idea of how auto compounding transforms an APR into an API and the magnitude of that.
Yeah, at those kind of high rates, it's very significant. Like the higher the rate, the higher the compounding rate will be. At 100% APR, the APY compounded is going to be somewhere around 170%, I believe. Whereas the example that I used before, where you had, say, APR at 70%, the annual compounding APY would be somewhere around 100%. But like I said before, just bear in mind that these rates are variable. So like if you invest at those rates and you leave it for a year, I think it'd be very unreasonable to think that, you're going to return 100%. You're likely to earn either less or more than that, depending on the value of the underlying incentive token and the amount of people providing liquidity. I think if we look at historic rates, you generally earn more out of providing liquidity to liquidity pool farms earlier on, because there's less people providing liquidity to those farms. And depending on the DEX protocol, Magic's been relatively successful. The token that they're incentivizing fluctuates in value. A lot of them have dragged down over time. So it's worth bearing those points in mind when you're looking at these interest rates, that it's variable. It's not like a guaranteed fixed rate.
Yeah, that is also great advice. So let's go a little bit more into that on how to make farmers' lives easier. So I'm wondering, what kind of advice would you else give farmers? So in my mind, a high APR doesn't necessarily mean that liquidity providers turn a profit, of course. Yeah, there are definitely a lot of scenarios that I could think of right now. But yeah, what general advice would you give people that want to provide liquidity and then also, of course, use Accumulator for that?
Yeah, sure.
Yeah,
go ahead, Grant.
I was just going to say that's a really good point, which I have seen happen many times where, as token prices are changing, people are saying like, what's going on? Like, I had triple digit APR or APY. And yeah, I mean, token price, it is kind of an interesting dilemma where, and I think that Magic C has done a really good job of, sometimes they can offer really crazy APRs and yet it still manages, they still manage their token price to not be as volatile as a lot of other projects. So I think that is the dilemma you have, is that if there's an emission that's triple digit APR, yes, that's nice, at least at some point for the person staking, but that also means that that's a lot of rewards for people to sell off and affect the token price. So there is a trade-off there. Now, I think what's good about Accumulator is if you are wanting to just hold long term, we did run some tests towards the end of the year last year, just looking at positions based on what the market prices ended up doing. And, a lot of people, even with like sharp downturns, still ended up turning profits through compounding. Not that is the end all be all, there's a lot of factors that come into play, but I would say that just like anything else, if you're thinking long term, compounding is not a bad idea. If you are, if you maybe have a smaller portfolio and you're more concerned about, weekly downturns or daily downturns and that stuff, then you might be better off collecting emissions and, selling rewards and that kind of thing. But yeah, there's significant impact, especially just based on the tests we did here towards the end of the year.
Just to add to that as well, I guess advice in regards to providing liquidity is like, do your research and invest a little bit to begin with until you understand like the benefits as well as some of the drawbacks to providing liquidity. I personally think that there's a lot of benefits to providing liquidity, and I've always provided liquidity, but there are some drawbacks, and one of which is impermanent loss. And to be honest, I don't want to spend sort of 10 minutes talking about impermanent loss, because I probably won't explain it as well as maybe a YouTube video will in sort of 2-3 minutes. But I'd implore everybody to like Google benefits and disadvantages to providing liquidity on DEXs. But ultimately, providing liquidity is kind of the lifeblood of DeFi. And so it needs to be incentivized, and MagicC are doing an incredible job at doing this. And we saw that on ShimmerC, and I'm sure they'll do an equally good job on top of IOTA, which is why, you know, we're really proud to partner with them and talk with them constantly as a team. Oh, just to mention as well, there is a slight conflict of interest in that Nakama, we did get involved in the token launch for Loom, and like we're holders of both Loom and Magic Loom.
Yeah, disclaimer out of the way. Lovely. So on the topic of strategies, I've been looking at the documentation, and it reads to me as if you are having plans on running actively managed vaults in the future. Are you able to confirm my suspicion here?
Sure, yeah. That has always kind of been on the table, that as things progress, you know, and like I said before, we knew IOTA EVM was coming, which would bring in a lot more volume, a lot more opportunity for offering tools for people to utilize. And they're not in development yet, but we are looking at, you know, things that on top of, you know, the beefy vaults, you know, we would like to look into things like kind of like delta neutral strategies. And of course, I think the biggest thing we would like to keep an eye on is behind the scenes.
Oh, I think we just lost you there, Track.
Really good position.
And you're back. Could you repeat the last sentence? I think then we're all caught up.
Oh, apologies. Can you?
Okay. And he's gone again. I think you're back now.
All right.
Yeah, go for it,
everybody. No, I was just going to say that something we're really keeping an eye on is that I think that IOTA is going to be in a position to be a heavy hitter in the RWA area. There's a lot of work being done in that field, and it's actually really exciting. But I think what I would be personally most excited about is the opportunity to develop strategies that involve some of these RWA assets. For instance, if you had something that was like stable coins, investing in like treasury bonds, still having some kind of strategy where people are able to earn extra yield on top of like the yield they're currently earning, utilizing RWA stuff. So there's a lot of possibilities coming up. In case I cut out, what I was going to say was, we were hoping that on top of kind of like the beefy compounder stuff to get into more complex stuff down the road, especially with the volume that IOTA EVM will hopefully be bringing. Now that there will be more lending protocols and more DEXs, and it opens up to the door for, you know, things like kind of like delta neutral strategies, basically just more complex things. So yeah, we definitely have our eye on that. Those are not in development yet. Right now, the focus is getting vaults up for IOTA EVM, the token. We also have a generative NFT collection we're working on that also ties into the ACCU launch. So, but those things are on the table, and they're definitely coming in the future.
Yeah, I guess to add to that as well, like if we anticipate that we're going to see like real world assets tokenized on top of IOTA, the typical type of investor that's perhaps going to hold them are slightly more sophisticated than like your sort of DeFi degens, and so trying to convince them to use those tokens within a DeFi strategy, it's a lot easier if you just have a automated DeFi strategy vault where you just say, here's a DeFi vault, you can stake your tokens in here and it will actually automatically, run the DeFi strategy. That's far easier to sell to those type of like users than if you say to them, oh, by the way, you've got some RWA tokens, like we want you to, place these as like collateral on top of, liquidity as an over-collateralized CDP. You then take the stablecoin debt. You can then, implement that onto Deeper as a lending, as part of lending liquidity, and you're going to earn a yield there that will offset the debt position on top of liquidity, and like you'll earn like a delta neutral like return. That's really, that's far too much for them. Like they're going to be expected to go across like three or four different like DeFi applications to actually set up that strategy. Whereas if you can make it simple for like investors and say, look, here's a vault, here's what it does, and you can explain what it does in simple terms, you're a lot more likely to attract capital and liquidity into that DeFi strategy than if they had to go across 3 or 4 different platforms. So I think that's something that we're kind of researching right now and really interested in.
Yeah, I think that makes a lot of sense. I think most people that are not already involved in crypto, right, they will probably roll their eyes at our simple 17-step plan to be providing liquidity in a strategy somewhere. Just having a one-click solution where all of that is taken care of, that is, of course, having a much bigger appeal and definitely larger chances of onboarding. All of the people that are not yet in DeFi. So yeah, awesome to hear that you're already thinking in this direction.
Yeah. The other cool thing with those type of like vote strategies as well is that it can give maybe some more like traditional investors or like non-crypto investors like exposure to like utility tokens and crypto in our ecosystem, whereby, if by deploying that capital into those dApps, they could also potentially be incentivized with, like emissions of maybe like Virtue or Deeper and Accumulator, as like another passive return on top of like the delta neutral return. So then they gain exposure to, like the Web3 ecosystem, kind of indirectly. And, we hope that some of these investors then will kind of fall down that rabbit hole like I did in sort of 2015 to 2020 were like really exciting years for me and really kind of delving into like DeFi and the ecosystem.
Yeah, definitely. I think there's a lot of people left out there who are yet to be excited about Web3 and particularly IOTA. So awesome. Seeing you take this direction. Very happy to hear about that. This almost brings us to the end here already. So if there are any questions in the audience, then please raise your hand and we'll get you up on stage. The last question that I have written down for you guys was actually what's next for Accumulator. But instead of asking that, let's pick up the question of Metze M, taken from our Twitter. And he is asking, is Accumulator getting new features, for example, dashboards, reward overviews, UI updates, or will the product stay like this forever?
Yeah, and that's a really good question. And I was going to answer on the feed, but I figured, hey, I'll wait for the spaces. We did have a discussion on our Discord, I guess it was a day or two ago, where I gave just a little update in terms of just, more of housekeeping things. And yeah, that was our number one request since we started was just giving better data for people's positions and what they're earning. When we first developed it, we had kind of the idea was to keep it, I guess, more simple in terms of like, hey, here's like your position value overall, counting everything, right? So you could see your position and what it was worth, of course, but that was kind of counting all the variables, all the factors. So that could be confusing sometimes. Like let's say a token was down, people would be like, I don't understand. Like, why is my position not worth as much as it was 2 days ago? So what we've been working on in the background was to deliver something that really just gives people a larger view of their data. And we've been working on this to launch it for IOTA EVM. As I think sometimes people do forget that, Shimmer is the staging network. So we were happy to make sure that, the contracts, everything's just running smooth, everything's running how it should. But when we knew IOTA EVM was coming, we knew it was time to, kind of shift gears in that direction. So yeah, that is coming. And I know a lot of people will be very happy about that. I think it was confusing sometimes for people that maybe aren't like as familiar in DeFi. Like I said, when you would have, say, the price of Shimmer go down and maybe the price of a token go down, and somebody's going, hey, I don't understand why my position is somehow worth less than it was a couple of days ago, even though I'm still earning more liquidity tokens. So the new dashboard, it's like I said, it's just a bigger overview. It's got like your total P&L, your total amount of liquidity tokens you've earned. There'll be kind of like a graph showing you, how much LP you've actually generated versus what the P&L is. Just trying to give people like all the tools necessary to maybe be able to see like, hey, okay, I'm definitely building my position, even though the value has maybe gone down or gone up more than I expected. So, to answer that question, yes, there is, that's been pretty much the priority, while we were waiting for IOTA EVM, was to make something like this for our users. And, we're getting pretty close. I'd say we've tried to time it so that hopefully it will launch with our vaults. I don't know if it will be necessarily that very first week when the new vaults go live, because we're still just in a position where we're kind of just waiting for that to happen, and we don't know exactly when it's going to happen. But yeah, it's going to be very soon. Like I said, we're kind of at the finish line with it. So I'm really excited for that. I think that will hopefully, like I said, it's been our number one question, our number one, suggested thing to do. So we're really excited to do that. So that will be probably the biggest addition to the site moving forward, besides the IOTA EVM vaults. And then once ACCU goes live, we are also working on like a different area that will be like the staking area. And it'll be good because we will be able to apply these things we've developed for the dashboard to the staking area as well. So hopefully right off the jump, people will be comfortable being able to say like, hey, I can see everything that's happening with my position and my earnings and know what's going on, instead of it being like, oh, okay, well, here's what I deposited, here's what I have now, and everything in between is kind of like hard to figure out. So yeah, we're really excited about that though. We've been working really hard on it, and hopefully users will be satisfied with it. I think they will.
Awesome. Yeah. Thank you, Metze M, for asking the question. I think the answer is hopefully going to be satisfactory. I'm also hearing the notification of people raising their hand. Unfortunately, I'm not seeing anybody here visually. Not sure what's going on there, but yeah. So last words, anything that you want the community to take away with here as parting gift? Now is your chance, for example, to shill your socials and all of that good stuff.
Yeah, I guess be sure to follow Nakama and Accumulator. There's plenty of other projects that Nakama are building on. The team is growing all the time. There's roughly 25 of us now working within Nakama, and there's the great thing of like having this large team building out across a lot of different applications is that we can build really good synergies across them all. So when we're talking about like developing like vote strategies for like more complicated DeFi strategies, we're able to like build these like strategies within like synergies of not just applications that we're building, but like applications that we got like good partnerships with. And so we're really keen to reach out to anyone that we've not spoken to yet and discuss the concepts of like partnerships or where we can build like DeFi strategies with Accumulator, and just try to grow this space and ecosystem and community as much as we can.
Lovely. All right. So then thank you so much. Thank you, Rob. Thank you, Drag. Thank you, everybody who listened. And of course, always take note. This episode has been for informational purposes only, of course. Last thing that I want to get out of the way, we have an AMA coming up this Thursday with the ecosystem team. So if you're interested in that, then check out our Twitter account. We will be posting about that. And yeah, so that has been great. I'm leaving this space a whole lot smarter. So thank you so much again. And yeah, it's been great.
Oh, and just one last thing. I just want to say thanks again. Thanks again, Jonathan, for inviting us up, and like the wider IOTA Foundation team as well, particularly the ecosystem team. Like, I can see all of their hard work, and I know we appreciate it, and I hope the community appreciate it as well, because you know they're working around the clock to make this a success. So thanks again, everybody.
Hey, thanks
for listening, everybody.
Yeah, thanks for the warm words as well. And with that, I'm going to send everybody into their well-deserved evening hours. Yeah, thank you so much, and hopefully see you around for the next episode. Take it easy, everyone, and have a great night. Bye-bye.
Adios.